Assalamualaikum, hello everyone, welcome to my video. I'm Endy Gunawan Turki, currently enrolled in the MBA program at IPMI International Business School. In this brief video, I will share insights about one of my courses, Corporate Finance, which is taught by Professor Roy Sembel. He is one of my favorite lecturers at IPMI. Through this course, all participants will have ability to solve problems, especially in finance of corporate, from the point of view of management as internal side and investors as external side, where they are expected to be able to explain important financial management decisions and interlink it among them, apply financial management decision-making tools in analyzing financial decision problems, explore and evaluate opportunities to create financial value to firms and investors, utilize logics of corporate finance to improve participants' decision in other business-related situations, and demonstrate ability to discuss in a structured way hot issues that emerge in the business. This course contains some topics consist of financial management and time value of money, capital budgeting, analysis of securities and portfolio investments, capital structure, corporate restructuring, fraud risk management, and international finance, recent issues in finance. In financial management, we will learn some subtopics like goal of financial management, the corporate of financial markets, principal agent problems, corporate governance, 4 cornerstones of corporate finance, and 5 business essentials. For time value of money, we will learn about the compound value consists of present and future value. We can describe the financial management as optimal orchestration of internal and external financial resources towards significant and sustainable value creation. There are some objectives in the goal of financial management consists of basic objectives, operational objectives, social objectives, and research objectives. From all the objectives, the main is basic objectives to make significant and sustainable value creation. For corporate financial markets, we learn about the cash flow from investors to corporation and the benefit that can be obtained by investors as dividend and government from tax. We also learn about principal agent problem that consists of conflict of interest, asymmetric information, and moral hazard. The outcome of all these points is adverse selection, which is introduced by Josh R. Akelov. He explained about the used car market context, where the buyer and seller have no equal information about a bad car that is called as lemon. The seller hides the defect of the lemon car so the buyer will not pay the car with high price, and the situation affects the other car price, including the good one. In corporate governance, we will learn about the principles of GCG that we call tariff. They are transparency, accountability, responsibility, independency, and fairness. GCG will resolve some aspects that are prudent management according to mandate given, sustainable performance improvement, better corporate image, and value creation. For subtopic 4 cornerstones of corporate finance, we learn about value creation that is divided into 4 values. There are core of value principle, conservation of value principle, expectation treatment principle, and best owner principle. Next subtopic, we are taught about 5 business essentials that is introduced by Professor Ramcharan. The 5 are cash, profit margin, velocity, growth, and customer focus. And the time value of money, we will be shown about how to calculate the compound value that is consists of future value of lump sum and present value of lump sum. We use future value to estimate amount growth of money in the future that is invested in the current, and for present value, we use to assess the current value of future cash flow which is invested. Next topic about capital budgeting. Capital budgeting is a planning process for investment in long-term assets. In this session, we will learn how to understand making evaluation for some methods of capital budgeting. First method is payback period. In this method, we will evaluate the efficiency of an investment based on time required to recover the initial investment amount. The sooner is better. The weakness of payback period are subjective because it based on decision maker preference, not consider time, value of money, and not consider all cash flow. The second is net present value or NPV. NPV measures the present value of the future cash flows generated by an investment. It provides an overview of the overall financial profit expected from a project or investment. The simple way to analyze the NPV, if NPV positive over than zero, the investment is feasible. It's expected to generate value over and above the cost of capital. This is generally considered an indication that the investment is worthwhile. And if NPV is zero, is indicated the investment will generate a return equal to the cost capital without profit and loss. The last, if NPV is negative below lower than zero, it means the investment potential will be lost and not visible. So we can accept the investment if the NPV is positive more than zero. The third method is profitability index or PI. The decision rule is we can accept the investment if PI more or equal than 1. The PI formula itself is present value of cash flow divided by initial outlay. The fourth is internal rate of return or IRR. The investment is feasible if IRR more or equal than required rate of return and can be accepted, otherwise the investment will be rejected. IRR is the better method for project evaluation, and NPV is more conservative than IRR. If the condition uncertain, better choose conservative method, that is NPV. For topic analysis of securities, we will learn about fundamental analysis and technical analysis. In fundamental analysis, we can analyze the performance of company using some ratios such as return of asset and return of equity. For knowing profitability and to know liquidity, we can see from current ratio and quick ratio. To know the leverage, we can get info from debt asset ratio and debt equity ratio. And for market ratio, we use dividend yield and price earning ratio. We are also taught to analyze the healthiness company from 5 indicators. They are natural level, quality of number, historical trend, industry benchmark, and decomposition. For technical analysis, that's about finding repeated patterns in the stock price graph. We also learn about intrinsic value versus market price. If the fair value more than stock price, then we can buy it, but if the fair value less than stock price, we can just sell it. For portfolio investment, we learn about some items. They are potential future return, actual historical return, required return. The others about profitability weighted versus simple historical average measurement, return versus risk, total risk, systematic risk, unsystematic risk, correlation and diversification, efficient frontier portfolio theory, and CFPM. Next topic about capital structure. Capital structure is the composition of long-term source of fund, that is written as fixed asset, consists of debt and also shareholders' equity. Determining factors then can make optimal capital structure are tax benefit consists of profitability, interest rate, and tax rate. And the second one is expected cost of financial distress consists of volatility, cash flow, current ratio, market size, and good corporate governance. The next session of topic is talking about corporate structuring. In this session, we will learn about surviving and transforming business, that we need to stop the bleeding, financial restructuring, and etc. Restructuring corporate structure, that we structure some aspects such as capital structure, working capital management, and etc. We also learn about leverage buyout or LBO, value creation, and outcome financial distress. For topic fraud risk management, we learn about occupational fraud and abuse, the reason why someone gets fraud. We also learn about the 7 shenanigans that are some disrepute, badness in corporate effort and in their financial statement. And we also learn about some action to prevent the fraud, like bill ethics, whistleblowing mechanism, and etc. For international issues, we get some materials about foreign exchanges, foreign exchange transactions, currency future and option market, arbitrage strategies, international arbitrage, and exchange rate big picture. For few the recent issues in finance, we have to watch some movies about business and corporate theme, and we have to conclude and review about the corporate issues that is happen in the story of movie. For my group, we get movie, the title is about Rogue Trader. This movie is based on the true story about the bankruptcy of leading banks that has been established as the oldest bank in England. The bank became bankrupt caused by one of their trader managers who did illegal action in stock trading. For the last session, we learned about dividend policy. Dividend is important to be shared to the shareholders and investors because it can increase the trust and image of the corporate. And if the company is listed as public company, it can describe indicators that the company is in good performance and health in their financial, so their stock price can become up to the higher price, and as investors, better choose dividend than capital gain, considering the cash money that can be obtained and the amount of tax. We have to remember that cash is the king in financial for investors. I think that's all that I can share to you about corporate finance. Hopefully, this brief video can give some benefits and add our knowledge. Thank you very much for watching. Please like and share, and see you again in another time and opportunity. Wassalamualaikum.